After the successful relaunch of the Silver Bullet Silver Shield series with Warbird last week, we are continuing the momentum with the introduction of Love. This opposite consciousness solution coin, done by Heidi Wastweet and produced by the ISO-certified Golden State Mint, is a beautiful reminder of how love will save the world. You can purchase Warbird and Love at stbullion.com.
This is the Doc and Eric Dubin with the ST Weekly Metals and Markets. Well, Eric, it was a big week for gold and silver this week. Both metals saw strong rallies, especially earlier in the week. Silver got back above the critical $20 level. Gold is traded back over $1,300. It's off over $150 off its lows of, July 4th, July 5th, right around that 1180 bottom. Today, Friday, cartel, it was pretty clear, was attempting to keep silver under 20 for the weekly close, and they just barely succeeded in the access trading for silver. Silver closed the access market at $19.99, but gold held in pretty strong, basically flat for the day after being down early, and ended over $20 off its lows, back above $13.30. So all in all, pretty strong action for the week, and even on Friday, all things considered, to end the week's trading, Eric.
Yeah, indeed. In fact, the overall tenor of both gold and silver, and in particular gold, and gold has been kind of leading silver over the last 2 weeks or so, very positive. You might not take that given what we've seen at a cursory level for all of the trading. We've seen a couple of days where the cartel had come in and pushed prices down pretty significantly. But what's really the most important take-home point, folks, is to remember that for the last 3 weeks, we've seen signs of trading patterns in various markets, gold directly, silver directly, the equities of mining companies and other trading dynamics that show deviations from cartel patterns. And last Friday was a giant pattern shift where we had this big jump up and then a follow-through day. I mean, we had 4 trading days consistently where gold was moving higher, and that just, in terms of cartel capping, that doesn't happen. And we even had that 3 weeks ago as well, too. In the broader spectrum, when you look at the trading this week, we saw, for example, very reasonable trading going into the gold expiration on COMEX, and typically the cartel beats the living out of gold on an options expiration day. And in fact, gold held its own, and today in the access market it was closing up on a high because, frankly, traders are looking at the next week and saying, hey, we really want to be more covering of our shorts and or going long, depending on the trader in question. So then next week we have a pretty significant batch of economic issues coming on the calendar. The Federal Open Market Committee is going to be announcing their next policy stance. We have the unemployment report coming on Friday. We have the Treasury issuing just a whole swath of bonds on Wednesdays. The housing Case-Shiller numbers are coming out, I think, on Tuesday. So it's going to be a really, really busy week economically. And it's fascinating to see that despite all of the efforts of the cartel to keep gold and silver down, that we've seen some very significant price resistance and people continuing to position to be long. So it's as far as what the tape is telling us, tape reading, it is a positive picture, and I suspect that next week will be very volatile, and we'll see some pretty big swings given all this economic data. But I don't believe that Bernanke and company are switching back into the hawk mode just yet, given the craziness that they created starting about a month ago when they were flipping back and forth trying to take some of the froth out of the bond market. Now they're decidedly still in the dove mode, and next week should continue that pattern. And if that is indeed the case, then this gold and silver run that we've seen will continue, and we'll finally get over $20 in silver firmly, and then all the traders who respond to technical signals will be carrying that ball and running with it next week.
Next week will definitely be a big week with the FOMC statement. Let's get back to talking a little bit about some of the fundamentals and update readers quickly here on the wholesale side in the U.S. Really didn't see too much change this week. Silver Eagles and Silver Maples, a lot of the primary dealers, the wholesalers, are running about 4 to 5 weeks out on Eagles. Same thing on, well, not quite as much on Maples, about 2 to 4 weeks on Maples. Premiums holding pretty steady throughout the week as silver hovered around $20. Just looking down through the 100-ounce bars, pretty amazingly, several of the suppliers are still month-plus delays. A couple of them now have some in stock, but still long delays persisting on even the big bar sizes. But then moving on, I just wanted to quickly touch. Regular SD Metals and Markets listeners have been aware Eric's been really driving home the point for several months here, I would say, that India's gold smuggling is just going to go exponential this year with their new restrictions. And today we had confirmation of that with the Wall Street Journal, and Zero Hedge picked up on the article as well. Gold smuggling has absolutely soared in India this year with the new regulations and restrictions. They're trying to cap the official importation of gold. So just like Eric called here several months ago, smuggling is soaring. The Wall Street Journal says smuggling of gold seems to be increasing every month. The number of people arrested for gold smuggling has risen from 4 in the entire last year to 32 people in quarter 2. So we have nearly 100-fold rise in the number of people arrested, and the officials are saying they're really only detecting about 5 to 10% of the gold smuggled.
And that's the most important point.
Probably even less than that.
Right.
So
you'll find a fishing boat washing up with some guys carrying 40 pounds of gold. Big deal. I mean, that's one of the 32 that they're counting.
So that really the point remains that gold is continuing to go into India. It's just the official numbers aren't showing as much due to the restrictions. It's just the percentage of smuggling is going up to compensate.
And notice, too, that the Wall Street Journal story and also Zero Hedge coverage of it doesn't actually get into the actual numbers that we're talking about because they just have no clue. Well, if you just base it on what happened previously, in 2012, bullion dealers who have some basis and closeness to the market to be able to judge estimated that about 10% of the entire importation of gold in India was via smuggling routes. And that was maybe on average when the tax rate was at about 4%. And more importantly, there did not exist restrictions on bullion dealers and importers' ability to take out loans to purchase gold, and then they set up their transactions and clear a transaction and not have to worry about financing it. These days, that's not possible. That's a very big restriction. It's far more important than the tax hikes that we've seen. So anyway, getting to the bottom line is that in 2012, maybe we had an average tax rate of about 4%, and yes, the rupee was down a lot compared to world currencies, particularly the dollar, and so there was pressure on the market. And even despite those somewhat modest restrictions, smuggling still represented 10% of the import. So it really wouldn't. And that, I should say, accounts for some 80 tons or so, maybe 100 tons of gold. So now that we have all these massive restrictions, it really is not a stretch as a back-of-the-napkin estimate to say that, what would 200 tons of gold be or 300 tons of imported gold on a 12-month forward basis represent in terms of smuggling? I mean, that's entirely doable, and I think that's what we're looking at going forward. And that represents 20 to 30% of all of the gold that was imported into India last year. It's a huge, huge difference. It just goes to show that markets will find a way, and the black market at this point is the only free market in India.
Fundamentals continue to scream. A big move is at hand. GOFO has now been negative 15 days in a row and counting. It looks like a permanent negative number there. We have the Chinese continuing to import massive amounts of gold. An article we had today on SD pointed out that just in the first 5 months of 2013, so not even the first half, a little less than the first half, mainland China imported more gold than during all of 2012. And that was the first half, so that's like not even including June, which is going to be off the charts, I'm anticipating. I mean, it could be 1,000 tons, as I think it was April. Let me see if I can find the info here. This past May, out of the LBMA, there was 877 tons flowed out of the LBMA. It's been about 1,200 tons so far for 2013 through May that have gone to China. So that number is only going to balloon and I think explode when the June and July numbers are out, Eric. So we have that, and then really the big story breaking here tonight, Friday, JP Morgan announcing that they're going to attempt to exit the commodities business. In a statement, they said that they're concluding an internal review. They're going to perceive strategic alternatives for their physical commodities business, including its remaining holdings of commodities and its assets and its physical trading operations. The options they're going to explore are not limited to basically a sale, spin-off, or strategic partnership of its physical commodities business. So it's pretty big news, especially in the light of, in my mind, the JP Morgan's gold vault almost bone dry empty. So JP Morgan's going to seek to spin that off, but note that in the bottom of its release, JP Morgan remains fully committed to its traditional banking activities in the commodity markets. So they're not going to totally leave the commodity markets, Eric.
Yeah, and we should, break this story down in more detail so that people can understand what's going on here, because to some extent it's somewhat confusing based on the headlines that are out there. It's not that they're leaving their overall derivatives-based commodity trading operation. That, in fact, is going to remain up and running. The primary markets that they're leaving are the things that they've entered into in the last, roughly 10 years or so, as deregulation permitted the investment banks, JP Morgan, Goldman Sachs, et cetera, to actually get into the physical trade of commodities. So we're literally talking about investment banks leasing out oil tankers for 12 months and carting around oil and being able to even have oil on a tanker sitting in a harbor and not doing anything with it, such that they could physically deliver at a more opportune time and have that as the icing on the cake above and beyond the paper derivatives trades that they do. And then you have the warehousing operations and much in the news lately about Goldman Sachs in particular in their massive warehousing operations for aluminum that was increasing the price of aluminum by, as the regulators were saying, an estimated $2 or $3 billion per year or so. Americans having to see 2 or 3 cents extra on their cost of beer cans, that just can't be. We got to make sure that Joe Sixpack's getting his beer at a fair price.
Exactly. You can mess with the metals prices, that's fine, but you touch the price of beer, that's going to be hell to pay in the U.S.
But, I read this story and I see it as basically a shifting of attention. People, you need to understand that, J.P. Morgan's 2012 net income, as they report it, and we won't get into the fact that their numbers are kind of goofy when you have the Federal Reserve hanging out and munching $40 billion worth of mortgage-backed securities from the entire banking industry worth 50 cents on the dollar, et cetera, et cetera. Nevertheless, even though these numbers are kind of bogus, what they officially reported in terms of their net income was $21 billion for 2012. This physical commodities operation is, maybe a couple percentage points at most of that profit pie. The vast majority of where they make their money, the goose that lays the golden egg for J.P. Morgan, is the paper derivatives trade and all of the shenanigans that come in that. And frankly, I see this announcement about their physical markets operations that they've added on over the course of the last decade or so, and exiting of it, is merely just placating the regulators and shifting a focus away from what's really their core operations and where, in fact, they do the most harm to the operations of capitalism, for lack of any hyperbole on my part. And that's the distortions that they do in terms of the price of money as affected by the price of gold and interest rates and on and on and on. That's where they don't want the public to look. So they're exiting this physical markets trade, but
almost like a plausible deniability for JP Morgan.
Well, it's a cost of doing business. It's the same thing that happens when the regulators slap on $1 billion fine or what have you. I mean, it sounds like a big deal. The public says, "Oh yeah, well, those poor banks, they're getting hurt again." There's actually some that take that reaction, and in the meantime, they're able to continue on to multi-billion-dollar operations that is indeed their bread and butter. So, in order to continue with a COMEX and LBMA operation of gold and silver trading, folks, you have to have some physical within a vault. You can't have a futures market without some physical to presumably be able to deliver against the contract in the future. Otherwise, you just have a cash-based market. And in fact, that's what we are evolving towards, and James Sinclair has been talking about this as of late as well. The system is breaking down. It's under pressure, and though we may not have what's called a commercial signal failure and the thing just falling apart in total in the near term, I mean, in the long term, that's the direction we're moving, is that the physical market is going to trump derivatives trading at some point, and this exit of their physical operations of the warehousing and oil tanker operations and all these other type of things that they've been involved with, frankly, is just one milestone along the road of this evolution where the commodities market, or I should say more specifically gold and silver, are going to probably be on a cash basis at some point in the future. Again, the point, folks, is that when you look at the declining inventory in COMEX Gold and JP Morgan, it's very important. There is a linkage, as we have noted in that story up on Silver Doctors right now, but the linkage is a little bit hard to see at first because it essentially is indirectly connected to the physical story of JP Morgan exiting those business lines. The COMEX is under pressure. JP Morgan is therefore under pressure, and the regulators are beginning to sniff around and wonder what's going on with them. And to distract the regulators, they are in fact exiting these other businesses that don't represent the core operation of derivatives trading and the COMEX operation and so forth. So that's the link and the correlation with the decline in the gold inventory at COMEX. And when you see something like that, you got to wonder, you got to think like a criminal. I mean, if you think like a thief, these guys are trying to distract the law enforcement.
Exactly. So that's a good place to wrap it up here, Eric. So for the week, we had gold and silver, pretty strong rally and holding tough on Friday in the face of really frankly anticipated cartel raid, but they held up pretty strongly. We had JP Morgan announcing right at the close that they're going to be trying to exit the commodities business. The physical, that's right, not the futures trading whatsoever. We have the GOFO remaining negative 15 days and counting. Looks to be a semi-permanent fixture now. We have physical demand just continuing to escalate throughout Asia with India, China, and Russia. So again, next week we have quite a batch of economic reports hitting. We have the Fed meeting in the midweek, so it'll be a big and exciting week next week, I'm sure. So for the Doc and Eric Dubin, thanks for tuning in to the SD Weekly Metals and Markets.
SD Bullion.